I'm Stacey Madge, and I am the country manager and president of Visa Canada. Canada has a very sophisticated payments ecosystem, and because of this sophistication, Canada was really able to weather the storm of the lockdowns that we went through as a result of COVID relative to many other countries around the world. Today, I thought I would touch on two important topics. The first is 5 trends that we have seen accelerated as a result of COVID. And the second is new trends that will really shape the future of payments in Canada. So let's dive in. The first big impact accelerated by COVID has been the massive shift to e-commerce. We have seen 3 to 5 years of behavioral change pulled forward to today. Before COVID, in-store spend represented over 50% of spend. Now, card-not-present spend is north of this, with volume growth of 900 bips and a percent of total spend. Evidence from Australia and Singapore indicates that e-commerce gains are sustained even after outbreaks are brought under control. In both of those countries, online sales as a share of the total remained 3 to 5 percentage points higher than prior to the pandemic. It is important to note that with the shift in e-commerce has come a greater weighting of fraud in card-not-present channels. We're seeing 12 times that of card-present fraud, and this really underscores the importance of tokenization, which is one of the most effective ways of reducing fraud. This shift to digital purchasing will continue as consumers have entrenched these behaviors during this drawn-out COVID period, and we adopt to more flexible work models post-COVID. We have seen 2 to 3 times growth year over year in areas associated with grocery and what McKinsey would coin home nesting. Today, click and collect and online ordering represents nearly a quarter of grocery spend. On the heels of strong consumer digital usage has come an expansion of pay buttons and digital wallets and the emergence of new ones, such as the EMV solution, Click to Pay. Usage of these pay buttons grew double and triple percentage points depending on the channel. What is interesting, however, is the shift in consumer behavior. People went from largely using their phones to pay at QSRs for their morning coffee and lunch. Now they're becoming commonly used for everyday purchases, such as groceries and gas, and home nesting categories, such as retail goods and restaurant food delivery. As people return to work, albeit under a new flexible model, some of the old habits will add to the new habits, and the growth of open loop transit will further accelerate usage, as we have seen in other markets around the world. The third COVID trend is the extent to which the pandemic has accelerated the digitization of cash. When we look at cash usage in the last 12 months on the Visa brand, we see that global debit cash volumes have decreased by 7%, while debit payment volumes have grown 16%. This 20+ point gap is more than double the historic gap in growth rates and relatively consistent across the globe. Since the pandemic, spending in Canada on Visa debit, as well as prepaid cards, has grown nearly 9 times more than credit, while credit spend has decreased. The current difference in our debit and prepaid growth rate is 80 bips, where historically it was closer to 20 to 30. To some extent, this isn't surprising, as people become very pragmatic in how they spend during periods of financial uncertainty. The fourth COVID trend is the higher impact on affluent spend, given their higher proportion of spend on discretionary purchases. Right now, affluent spend on travel, restaurants, and out-of-home entertainment is sitting at 15, 5, and 3% of 2019 levels, a year we now refer to as pre-COVID. With the vaccination rollout and the lifting of travel restriction, we'll see travel return and increase discretionary spending, which is what we are beginning to see in the US. Because of the paring back in spend during the pandemic, we are also seeing travelers' budgets higher than before. And lastly, the digital transformation of small businesses. The pandemic-induced e-commerce shift is reshaping retail. Early on, we saw an accelerated shift to mega merchants as a result of their more established online digital infrastructure, their access to inventory, and their ability to get delivery in hands fast. Small businesses were disproportionately impacted by the pandemic as they tend to sell at traditional brick and mortar shops. While SMB's share of purchase volume remains below 2019 levels, we are encouraged to see the accelerated rate in the digital transformation of small businesses here in Canada and across the world. Prior to the pandemic, our research showed that only 32% of small businesses sold their products and services online, and only 12% of their sales came from e-commerce. And while the shift to e-commerce was more pronounced for large businesses, small businesses were not far behind. In Canada, 1 in 3 large businesses pivoted to expand their online sales, but we saw 1 in 4 small businesses do the same. Adaptations and investments made last year to move online have opened up markets and new channels to reach consumers that previously may have been unreachable before the pandemic. The pandemic served to accelerate SMB transformation to digital. So let me now turn to other long-term trends we should all be watching out for. Across the world, we are seeing tech platforms become the new Main Street. If you look over the last 5 years, spend on Visa cards that takes place on one of the 10 largest big tech platforms has grown to represent almost a quarter of our transactions in Canada. But what we're seeing is that small and large businesses are also selling on these platforms. In the US, about half of small businesses are selling their wares online, and they're doing it on one of these platforms, which we're also beginning to see evolve on this side of the border. This is not a small trend anymore. These tech platforms or online marketplaces are the new main streets of Canada. This is where consumers and merchants are coming to buy and sell, and this trend is really taking off. You can see this spike over the last couple of years. In fact, we expect in 2022, more than a third of the top 15 merchants in Canada will be technology related. A big trend across the world is the acceleration in new ways to pay for consumers and merchants, from crypto to blockchain to real-time payments. And I'll talk about a few of these. I'll start with crypto. First of all, let's differentiate the two market segments as we see it. One is true cryptocurrency, like Bitcoin or Dogecoin, which are primarily assets held by people. They're not used much in the form of payments. We think of them as digital gold. And then there are digital currencies, including central bank digital currencies and stable coins that are directly backed by existing fiat currencies. And they're definitely emerging as a payment option. And they're running a public blockchain, which is really, in essence, an additional network, much like an RTP might be. So our focus is on 5 different opportunities that we see in this space. The first opportunity is really at the core of what we do, which is enabling consumers to make a purchase of these currencies or Bitcoin. And we're working hard with wallets and exchanges to just make sure we're facilitating acceptance and people's ability to use their Visa cards to buy. The second opportunity is enabling digital currency cash outs to fiat on Visa credential, which then makes those funds available for shopping at any Visa merchant and gives immediate utility to the digital currency. Today, we've got over 35 digital currency platforms and wallets that have chosen to work with us. Thirdly, is enabling financial institutions and fintech partners to be able to have a crypto option for their customers. Fourth one is settlement. We've upgraded our infrastructure to allow a financial institution to settle in a digital currency. And then the fifth area of opportunity is just working with central banks. Central bank digital currency is being explored in many nations across the world. So that's how we're thinking about crypto, with a real focus on digital currencies and the 5 highlighted opportunities. The next trend I'll talk about is installments, or buy now, pay later, as some people call it. In 2019, installments represented 1.7 trillion of global payment volume. And it's growing rapidly here in Canada, where we expect the installments payments opportunity to be about 50 billion annually. If you go to Sweden, Australia, Latin America, or the United States, use of installments is pretty mainstream, as the stats on the page suggest. For example, 30% of Australian consumers have used buy now, pay later services. This compares to about 60% of Australians who have used credit cards. In the US, over 40% of online-centric merchants are offering installments as a payment option, with more planned. In mature card markets, installments were traditionally an option that was offered, like layaway plans, or for very big ticket items. In less mature markets, it was much more popular an option at point of sale. But we've seen an explosion of interest in more mature markets, particularly among households with higher income. If you look at Shopify's Future of Commerce report, the number of Shopify merchants who offer buy now, pay later has increased 60% since the start of the pandemic. And the PayPal CEO commented on PayPal's installments performance. Since I've been here, I've never seen a product launch with that kind of scale so quickly. In Canada, installments will also scale quickly. We are working closely with buy now, pay later lenders as they build out their Canadian presence and expand their merchant bases. But at the same time, we have built our own installment solution, which leverages Visa's payments infrastructure to expand consumer and merchant payment options at face-to-face and online point of sale. It will be another feature merchants will use at point of sale that will result in an increase in sales. We're really excited for what's to come in this space, and we will have really big news to share with you as we work with many of our partners to roll out these solutions. Next, I'd like to talk about real-time and near real-time payments. Nearly all of the world's economies are paying attention to real-time payments and have either upgraded existing payments infrastructure or built new capabilities. Given real-time payments is going to be a big focus at the Payments Canada Summit this week, I'll touch on the consumer and business demand for real-time and near real-time payments. Within our business, Visa Direct allows a consumer or a business to push money to over 5 billion bank accounts around the world. Visa Direct has grown at extraordinary rates, 60% globally, and in Canada is grown at many multiples of this percentage. The pandemic has expanded adoption of use cases in P2P, B2C, B2B, and so on. Now more than ever, people need real-time access to cash. As we've already talked about, the pandemic has taken a toll on small businesses, with owners saying it will be 10 months on average until their business is back to being operational. According to our research, 44% of Canadian small business owners say real-time access to cash flow would have an impact on keeping their business afloat in the wake of COVID-19. We also know that the ability to optimize cash flow is critical to the success of small businesses. The majority say they want faster settlement, and 81% say they would pay to have this benefit. 85% say they would switch to a new acquirer who offered real-time payments. Last month, we announced Wave's instant payout solution, an accounting and business platform used by small businesses, which is integrating Visa Direct into Wave's invoicing and payments platform to allow business owners to use the money they've earned immediately. Gig workers have been a critical part of Canada's economy, especially during this pandemic. They want to have fast and easy access to their wages, and 70% say they would work additional shifts for quick money if they could be paid in real time. So we're working with Skip the Dishes, Lyft, and Instacart to enable real-time funds to couriers and drivers across Canada. As we look to digitize payment flows, Visa's mission to connect the world through our payments network is focusing on enabling all ways to pay, everyone to everywhere. We are growing endpoints, that is, the ways that consumers, businesses, and governments can access the Visa network, enabling use cases to enhance the movement of money between each group. This includes working with other networks to extend our reach. In the network of networks, a transaction can start on one network and end on a different one. For example, when consumers or businesses send money from Canada to the UK with Visa Direct, it starts on a Visa network, but some transactions are actually handed off to the UK Faster Payments Network for the delivery to a bank account. We have relationships with 8 real-time payments globally and are actively expanding those connections as our strategy develops. Remittances are a lifeline for millions of migrant workers, their families, and the communities where they live. It is estimated that there are almost 250 million migrants living outside their home countries, and remittances are believed to support an additional 750 million people worldwide. But if you're going to be moving money across more than one network, those networks need to be able to link up in a standardized way. Visa's role is about setting global interoperable standards to facilitate money movement. We want to make it easier, faster, and simpler to move money around the world. Commerce is global, and so payments should be as well. As we look to the future, we will see a big evolution in the way Canadians and Canadian businesses can pay and be paid. And I'm sure you will hear a lot about this as the summit unfolds. Enjoy the Payments Canada Summit.